Hey, this is Trevor from Wyckoff Speculator. Thought I'd post a video on the Taylor trading method and how I've been applying it to my trading. It's been actually very useful, really helping to build context. I like to have different types of indicators. I like momentum is one. I think I listed a few of them on there. This particular one is a cycle indicator, and I've never really used any cycles before. And I know it works. I know David Weiss is fascinated with cycles. He's told me on a few occasions where he likes to look at them and he's trying to figure out how to use them in his own trading. So I kind of found this useful. It's basically a day trading cycle. You can't really use it on longer term charts, but it works really well with determining, when the beginning of a cycle to the upside is going to start. And usually you have 3 days up, followed by a day or so down, back with 3 days up again. Even in a bear market, this happens. Was inspired to look into it because Linda Raschke talked about it in her webinar, and she found it very useful. So I thought, well, why don't I take a look at it? I can apply it to other markets too, not just the S&Ps. And it works. It's actually very useful. For those of you interested in learning about it, this is the site I found, Taylor Trading Technique. A guy by the name of Richard runs the site. He's a really nice guy. I've spent a lot of time on the phone with him, working on getting the labeling program on my screen. He's very open to answering questions, and he's actually written a really great book. If you subscribe to the free trial, he'll give you a copy of his book, so you may want to take a look at it. It tells you how to use Taylor in your trading. He's told me that a lot of his members say they've increased their win rate considerably by using this as a filter for their trading. So if they're at a 50 or even a 60% win rate, which is pretty darn good, Taylor will pop it back up to 70 to 80% win rate. I can see where that can happen. It's helped my win rate. I'm much better now than I was before when I'm using this. If I'm not using it, obviously it doesn't help. But very useful, and I'll show you how I used it the last couple days in my trading. Just to give you a perspective where I think the market's going. This was very weak action. I figured we were probably going to go lower just when we didn't bounce off this axis line. At this point, I thought we could go higher. This day in particular right here was a telltale that we were probably going to go lower. Had a spring off this level here and on top of an axis line. Seems like we should go higher. We even broke a down trend line. I'm starting to use trend lines for entries too, right there. But the following day, we sold off. No big deal, probably testing the spring. Started to rally, but when we failed to go higher, that was a pretty solid indicator to me that price was going down. Currently, we're oversold, though, in a trend channel in an area of where we began the last rally. So this is an ideal spot for a rally in the market. And I'm currently long, actually. I'll show you where I got in, but I'm long the market around 1650. I'm up about 5 points right now, which is pretty nice. But I think we could come up and test 1667, but that's an axis line again. First level will be 1663, which is the bottom of this consolidation. That'll give us a little trouble, but I really think we're due for a bounce. Demand starting to come in here too on the Weiss wave. I'm looking at a 4-hour chart here. Now, how I used Taylor in my trading, I'll show you an example. Yesterday was considered a sell short day. The same pattern reoccurs. You have a sell day, sell short day, buy day, sell day, sell short day, buy day. So it continually goes on forever. It never stops. So we will continue this cycle indefinitely. It'll never end. Some people like to change it. This looks like it might be more of a sell day or buy day, but Richard said that you stick to the same cycle. He's had the same cycle for a number of years. It works great. Your best is stick to it, take the subjectivity out, and it works. So yesterday was a sell short day, which I felt it was weak, especially given this action. Generally, in a sell short day, you look for a test of the sell day high, which we never got, but we broke below the buy day low, which is a good indication we're probably going to go lower. And I didn't short this consolidation. I felt we were springing here and we were testing. I thought we could go higher. I didn't want to risk going short. But once we broke down through the low the previous day, it's a pretty textbook trade. If you see my webinar, this is what I look at, previous day's highs and lows. Took a short there, got about 4 points there. Then got another 310 oscillator to sell here. Didn't take it here, but once we had, this is the third divergent bar, I just shorted on that bar. I covered it in here. It just wasn't acting well. I think I only got about 1.5 on that. But as you can see, Taylor really gave me context, as well as Wyckoff was pretty obviously to the downside. Wave structure was negative, ease of movement down. This is a choppy move up. We did have a spring that kind of gave me a little bit of pause. But probably if I was in trading breakouts, once we broke this level here, I probably would have shorted, but I don't treat that really like that. I like pullbacks better. So today was a buy day. Buy days tend to be down days too, but usually the low of a 3-day cycle is put in on a buy day a good percentage of the time. And I don't know what the percentages are. I think they're pretty high, close to 80%. So I knew that I was looking for low. I didn't short it all in the morning. I kind of felt like we were oversold in this trend channel here already. And this down move here was kind of choppy. It wasn't a lot of ease of movement. So I didn't take this short when it came down. I just still wasn't convinced it was going down that far. Came back from my computer. We had actually tagged a projected buy day low. Now in Taylor, this is where Richard's service comes in. He gives projected highs and lows for each buy day, sell short day, whatever day it is. And they actually are very good, especially if I don't usually buy them on those lows, but when they reject them and move up like it did here, not a lot of demand here, but if you look at the 3,000 tick chart, I think there was some demand that came in. Let me look. Yeah, not really. The Weiss wave didn't really help out. It was kind of a choppy rally, but I didn't take this 310 because it just looked like kind of choppy. But when we got a little minor spring here, I went ahead and jumped in. I covered it. I got about 6 points. Probably could have waited a little longer, but it was overbought. It was kind of, I think the Fed minutes were coming out. I didn't want to be in anything when those came out, so I got out for about 6 points. And this was choppy action. I just don't like trading that kind of stuff, so I kind of sat back and waited for the 9,000 to give me a 310. I was salivating with the idea of that. I didn't take this first divergent bar just because lots of supply was coming in, lots of ease of movement down, and I didn't like the look of it. But when we kind of started to spring here, I did jump in. I actually jumped in a little early. I didn't wait for the close of this bar. I got in around 16.50 and a quarter, I think I got in at. Also no supply kind of there, 310 oscillator. But, the structure was there. We had a change of behavior, change in wave structure. Actually, good solid demand in here. Here's some preliminary demand, which was kind of giving us an idea that we were starting to slow the sell-off. We had this climatic action. This is the second highest demand here. I knew I wanted to get back in, especially since we had a buy-day low put in. I knew that we were probably beginning a 3-day cycle rally. We've been selling off hard, so all these things, you kind of can build a story. It's all about building a story and then looking for signals within that kind of support your story. So, anyways, that's my my little explanation of how I use Taylor. I won't give his projections for tomorrow, but obviously tomorrow is a sell day. So any kind of rally, you look for the sell day projections to hit those projected highs. So you can still buy on a sell day as long as you haven't hit the projected highs. Once you've hit those highs, though, you stop going long. Maybe consider taking off your long positions. You can short them if you want, but generally a sell short day is the best day to go short. Look for a rejection of the sell day highs, and that's usually a pretty good indication, especially if it rejects it, that price is going to go lower. So anyways, there's my long-winded response to David's question. Hopefully that's helpful. I'll continue to show examples of how I use it in my trading. You guys might like to use it in your own trading. The nice thing I like about it is that it doesn't affect your trading system at all. It actually enhances it. So you can have any kind of trading system in the world. You could like Fibonacci's, you can like Wyckoff, you can like volume profile. It doesn't matter. It'll work. So hopefully you find it useful. You can get a free trial at Richard's site. He's a nice guy. He's very helpful. So anyways, I'll try to post some more this week.